Assalamualaikum and hi. Okay, today we will discuss subject E-entrepreneurship, ETR 2583. Okay, topic form of business. The major topic of form of business, and in this video I will further explain the subtopic of partnership and private limited company only. Hopefully by the end of this video you will gain understanding this topic. Basically, if any individual want to set up business in Malaysia, the business owner need to define its type of business ownership. In Malaysia, there are four type of business ownership or form of business structure, which is number one, sole proprietorship or sole trader. Second is partnership. Third is private limited companies, and number four or lastly is public limited company. Again, I want to highlight here that in this video I will only explain on the item number 2 and number 3. The rest will be covered by other lecturer in different video. Let us understand what is partnership. By definition, partnership is a business where several individuals agree to trade jointly and to carry on a business with a view to making profit. Of course, in business, everyone to make profit. But do remember that when the business having a loss, each partner of the business will share the loss as well. Maximum number of partner is 20%. And for professional firm, the maximum number is 50%. Professional firms such as legal firm, accountant firm, architect firm, and others. Under partnership, each partner contributed money, labor, or skill, and each share the profit as well as the losses of the business. Partners of a firm are always recommended to prepare an agreement on the article of partnership. In Malaysia, the partnership are governed by Partnership Act 1961. Okay, advantage and disadvantage of partnership. Okay, we have advantage, we have 7. Okay, number 1, increase in resources for capital. Okay, the presence of more than one owner means that more than one individual is providing funds for the business. Hence, it is possible to pool the wealth and resources of all the partners. Okay, number 2, distribution and sharing of business risk. All partners jointly share responsibility for the success or failure of the business. Any losses will be observed by more than one partner. Okay, number 3, direct reward. Partners are motivated to put forth their best effort as they will directly share the company's profit. Next point is taxation advantage. Most partnership pay tax as individual, thus accepting the higher tax rates assessed against corporation. Okay, number 5, combine talents and business acumen. All the partners' abilities are combined to cover a wide range of skill, idea, and expertise. Okay, ease of formation. Partnership. Okay, sorry number C is okay, EASE. Okay, of formation. Means a partnership can be established by meeting only a few legal requirements. And lastly, ability to specialize. Unlike a sole proprietorship whereby the single owner become a jack of all traders, a partnership allow partners to focus on their area of specialization. This can improve efficiency. Okay, for disadvantage, we have 6. The first point is unlimited liability. Although some partners can have limited liability, at least one partner must be a general partner who will assume unlimited liability. All partners are personally liable for the debts of the business even if those debts were incurred by one partner's mismanagement or dishonesty without the other partner's knowledge. If the partnership is sued or severe financial difficulty is encountered, the partners can lose much more than the amounts invested in the partnership. Number two, limited lifespan. The partnership may end if any one of the partners suffers from mental disorder, falls bankrupt, resign, or die. The lifespan of the partnership depends on the spirit of teams among the partners. Number three, lack of continuity. If any one of the partners die, is judged insane or simply withdraws from the business, the partnership agreement ceases. However, business operation can be continued by on the right of survivorship and the possible creation of a new partnership. This new partnership can be established with the remaining members or by adding new members to the partnership. Number four, share profits. Any profit earned by the partnership will be shared among all partners. Number five, share control with more than one owner. The possibility of partner disagree on how the business should run can emerge. This can delay the decision-making process and create ill will among the partners. Last, number six, conflict. The tendency for disagreements and conflict to happen is high. The action of one partner will affect other partners as well. A private limited company. Okay, next slide. Okay, private limited company. Now, okay, it was registered under the Company Act 1965, and by definition that the private limited company is a company limited by shared and owned by a group of people, which at least two or more individual, but not exceeding 50 people who pool their capital and work together to form a company. When it is called private limited, the term limited means it has a legal identity of its own that is separate from people who own it. The owner of the company are called shareholder. The shareholder elect a board of direction who are responsible for establishing a general policy of the corporation and appointing the president and other key official of the company. Okay, how can we differentiate private limited which partnership of public limited? We can identify through its characteristic which are the liabilities of the owner or shareholder are limited to the total capital that they are contributed, and the shareholder personal assets such as its car, properties are not available to the company creditor. Example, if the company from private limited facing losses to the extent of bankruptcy, the personal asset of owner or shareholder not bound into the crisis. Under Malaysia Company Act 1965, there at least two shareholder must be reside in Malaysia and usually considered as founder of the company. Okay, in this slide, you may see the term and condition of a private limited company in Malaysia. Firstly, it has restricts the right to transfer its share based on the owner contribution sum. Second, the number of its shareholder in a company can be minimum as two and can be exceed up to 50 people. Okay, third and fourth, it may prohibit any invitation to the public to subscribe for any share in the company and deposit money with the company for a fixed period of time. Okay, lastly, the company name must attach the suffix of Sendirian Berhad or the letter of S, D, and N, and the registration number at the end of its name. Okay, the next slide, advantages of a private limited company. We have six. Okay, first one is limited and limited liability. The liability of the company's member are limited to the capital contributed to the company. The shareholder personal asset are not affected. Number two, perpetual life. The lifespan of the business is not depend upon the age or resignation of its member. Okay, number three, attract skilled employees. A private limited company can attract the interest of skilled employees because the company's lifespan is guaranteed. Okay, number four is of expansion. Okay, size is not a barrier. Generally, it is easier to expand and develop a private limited company because of its simplicity in equity participation. Number five, independent of the members and shareholders. Okay, shareholders are not burdened with the management of the business because the responsibility of managing and running the business is held by the board of directors who are appointed by the company's shareholders. And point six is of raising capital. Funds are easily equal by exchanging a share of ownership or obtaining loans from financial institutions. Funds can be accumulated from time to time. Okay, for this advantage of a private limited company, 5 point. Okay, the first one is high setup cost. The cost of setting up a private limited company is high. Costs include payment charge according to authorized capital, professional fees, feeding charges, printing of the company's memorandum of association and article of association, share certificates, and the company seal. Okay, point number two, high taxation. The company must pay corporate tax as well as personal income tax. The earnings are subject to double taxation. Any earning of the company are first taxed as income to the corporation. Number three, limited membership. The number of membership in a private limited company cannot exceed 50 individuals. Okay, number four, lack of freedom in the transfer of ownership. A private limited company only has the authority to transfer ownership of its members' share with the approval of the company's board of directors. And number five, regulations. A private limited company is subject to more rules and regulations. It must always abide by the rule and fulfill the terms set by the Company Commission of Malaysian or CCM. A private limited company is not allowed to offer or sell any shares or debentures to the general public. Alright, that's all. Okay, thank you and hope you enjoy the video. Have a nice day.